Hello, my name is Maria Bezubova and you're at my channel Fertilizers Jazz. Here we talk about events, trends, technologies in the world of fertilizers and agriculture. Please subscribe to the channel, put like to this video, and let's jazz! Today is August 4 and this is a weekly markets update. Let's have a look at the news of week 31 and see what are the next trends. Please watch my interview with Chris Hyde, meteorologist and senior sales manager at Mediametics, where Chris uncovered weather trends for key agricultural regions in Q3. This is a must-know if you're a trader or market operator in agri or fertilizers industry, of course. So don't miss the jazz. Today is the big day that the market was awaiting during past 2 weeks. Today, Indian urea tender is closing and we will know first results very soon, I believe. Taking into account that Indian government is very dedicated to ensure timely supply, most likely this tender will be a quick one, same as the previous. India is the only market that is driving global urea demand at the moment. So, market players across the globe were mostly inactive last week in front of the tender. No fresh sales emerged from the Northern Africa. Egyptian producers are focused on the domestic market, and 3 production lines are still down there. Algerian producers are sold out for August, so feel comfortable. In the Black Sea, SOCAR has announced sales tender on Friday. We will know the results also this week, together with the Indian tender. Apart from that, activity in the region was minimal. Important changes are happening in the Turkish market. Last week, it was announced that Turkey is waiving import duties for Qatari products, including urea and ammonia. Qatar, being the largest global urea exporter, was never competing in the Turkish market with low-cost Iranian material. However, now with zero duty, Qatari product will be definitely competitive. It is a big threat for Iranian producers, of course, because Turkey lately was their main export destination. So they will need to drop the price in order to ensure that Turkish market will continue purchasing. From the other hand, there is another threat coming from inside Turkey, because Gemlik urea plant finally seems to start up. The company was shifting startup time for about a year, but finally there are first signs of operations, so most likely it will come on stream in Q4 as company management previously told. As a result of these 2 events, Iranian producers might lose at least about 1 million tons per year sales opportunity. Dangote was one of those rare producers globally being active last week. It closed a tender for sales of 2 lots, 30,000 tons each, at level around $470+ FOB. In the Middle East, there were no new sales done. Iranian producers were not able to get $435 FOB a week ago. So last week, their offers dropped by $5 to $10, and some sales were finalized. Pardes sold 30,000 tons of granular, and Shiraz sold 30,000 tons of prilled product. In Asia, 2 producers started planned turnarounds that will take about 320 to 40,000 tons of product out of the market in August, first half September. These are Brunei BFI and Malaysian Petronas. Indonesian Kaltim sold 3 cargoes of granular urea at $482 FOB in its latest tender, which will most likely head to India. The level is high, of course, and supports bullish sentiment in front of today's Indian tender. In China, export offers dropped even below official floor level, $400 to $420 FOB for prilled and $420 to $50 FOB for granular. Chinese urea is largely going to Latin American markets, but demand there is still quite subdued. Brazilian buyers are reluctant to start purchasing due to increasing CFR price level and worsening affordability. Last week, CFR price was evaluated around $460 to $80. Similar situation with demand is in Argentina and Mexico. In the US market became very nervous after President Trump announced 10 days timeline for Russia to conclude peace deal with Ukraine, after which sanctions will be applied. For now, it is still unclear if direct sanctions at Russian products are going to be applied. Definitely secondary sanctions for the countries that purchase Russian oil will be in place. And last week, those were announced for India 25% and for Brazil 40%. However, many American fertilizers market operators fear that direct sanctions will also take place, which will significantly impact situation in the urea segment and especially in the UAN segment. Thus, price in the US market increased to almost $460 FOB per short ton for August barges and $10 higher for September ones. Trump's 10-day period ends this week on August 8, so let's see how the situation develops. Paper values increased more for all benchmarks except Brazil. Egypt FOB increased slightly for both August and September. Same happened for Arab Gulf benchmark, because producers from this region will be the key ones supplying both latest Indian tenders. US NOLA future values corrected upwards by $7 for August and surged by $18 for September, amid uncertainty related to tariff policy. Brazil CFR dropped slightly for both August and September, amid buyers being reluctant to accept elevated price level. One more important news regarding US tariffs was the deal that Trump reached with the EU for setting 15% tariff rate for EU goods into the US. However, details are still unavailable, like, for example, clear list of exemptions. There is expectation that fertilizers might have special rate or exemption, but no info for now. Ammonium sulfate will be one of the products that will be significantly impacted by a new regulation. Last year, more than 50% of US MSOL imports arrived from European producers. So let's watch the final tariff rate for fertilizers specifically. Ammonium sulfate market continued to be subdued last week amid slow demand both in Southeast Asia and Brazil. Chinese crystal copper product price dropped more to $165 to $75 FOB. Granular price also fell to $175 to $85 FOB. Significant amount of floating product, which is en route to Brazil, is pressuring prices, and slow demand worsens situation even more. Nitrates market is mostly quiet, and producers start to reduce prices. Anwil has marked down nitrate by 22 euros in Poland. Yara is offering CIN in Germany at discount to its list price, while Fertiberia has also reduced CIN price in Spain. And even if the market is slow, there is some demand for CIN in Europe, and imports from Turkey are imminent. Turkey's domestic market is in the off-season, but producers are actively exporting CIN to Europe. In Brazil, there were no fresh sales and demand is rather subdued. CFR offers price level is evaluated at $350 to $60. There still will be demand for sugarcane, as local market players indicate. In the ammonia market, the key news of the week was August Tampa price settlement, with $70 increase versus July price. It was not a surprise, rather expected due to significant supply hiccups west of Suez that happened recently. August price is set at $487 FOB. All regional prices from the US and Trinidad corrected respectively. At the same time, offers from the Northern Africa remained at the previous week level because they corrected earlier. Turkish Gemlik sold 15,000 tons cargo last week at $520 FOB, and at the same time, Turkey continued importing Iranian products. Let's see if and how waiving of duties at Qatari products influences ammonia market in Turkey. East of Suez, supply situation continued improving. Ma'aden confirmed that its plant is fully back to operation and producers' appetite for fresh spot cargoes is indicated at $375 level. At the same time, Indonesian producer is entering turnaround season that will tighten supply from the region for August. In India, Kharif season slowly comes to its end. However, more ammonia demand is expected. In phosphates, finally seems like the ceiling is reached. Indian buyers rejected purchases more than $810 CFR level. Local market players show determination to hold on to this price level, even if concerns about DAP availability are still prominent. There is understanding that this level will hold until a new tender is announced, and for now there is no information about the timing. The only deal that happened last week was purchase of 60,000 tons of DAP from Saudi at the same $810 CFR. The market is eagerly waiting for outcome of the Bangladesh tender tomorrow, which will also affect Chinese levels. Due to credit concerns, suppliers are expected to offer product at a premium for Bangladesh. Egyptian NCAC finalized a sales tender last week. 30,000 tons of DAP was sold at $810 to $15 FOB, 24,000 tons of TSP at $610 to $15 FOB, and 35,000 tons of SSP at $205 to $10 FOB. Prices are largely at the same level as during previous tender. European demand is just starting to pick up in front of the autumn season, and various options are now available from Egypt, Tunisia, Turkey, and Morocco, of course. Importers slowly build up the stocks. In Brazil, worsening affordability significantly limits refill purchases. MAP offers at $750 CFR are met with no interest. At the same time, OCP sold 30,000 tons of TSP at $590 to $600 CFR for August loading, as a substitute to expensive MAP. In the US, there was a lot of activity at NOLA last week, as autumn season approaches, as well as tariff-related uncertainty mountains. DAP price surged by more than $50 to $790 to $820 per short ton FOB level. Still, this price level is not attractive for Saudi producer, as Indian sales provide better margin. MAP and TSP price remain more or less unchanged. Moving to the fundamentals. European natural gas futures hovered at the levels similar to last week, as expectations of stronger wind generation this week are set to curb demand for gas-fired power. Forecasts suggest slightly lower overall demand, with higher wind speeds across key regions set to ease pressure on gas for power use. At the same time, Europe's gas storage levels continue to improve, with facilities now over 68% full. Norwegian exports remain stable, though a continued unplanned outage at Norway's Karsto plant has slightly disrupted flows. US natural gas futures also remain unchanged at the level of $3.1 per MMBtu, pressured by oversupply concerns and mild weather forecasts. The latest Energy Information Administration data showed a larger than expected injection into storage last week. Average output also hit record in July, exceeding June's record. Rising supply coincides with near-term forecasts for cooler temperatures, weighing on power sector demand for gas. However, traders are watching for hotter weather later in August, which could boost air conditioning use and revive gas demand. Agricultural commodities future prices decreased more last week. Wheat futures remained under pressure, trading at $5.17 per bushel amid favorable weather across key growing regions. Rainfall in northwestern areas of the US plains is expected to improve soil moisture for wheat nearing harvest, though it may slow progress in areas where harvesting has already begun. According to the USDA, US spring wheat crop conditions deteriorated, with just 49% rated good or excellent, down from 52% the previous week and significantly below last year's 74%. In the Black Sea region, precipitation is forecast to benefit crops in East Central Ukraine, while dryness lingers in the South and the North Caucasus. Meanwhile, showers in New South Wales and Australia are improving crop outlooks, and some recovery is expected in the Canadian prairies next week, despite limited rainfall through the weekend. Corn futures dropped further versus a week ago. However, rebounding modestly at the end of the week, thanks to unexpectedly strong export demand and renewed crop risk concerns. USDA export sales data released on July 31st showed combined old and new crop corn bookings for year 24-25 and 25-26, both above the high end of trade estimates and bolstering US export momentum. At the same time, traders have started to price in potential yield volatility. While US corn conditions are rated about 74% good to excellent, and forecasts still point to trend line to record yields near 181.84 bushels per acre, Several analyst bulletins highlighted weather-related threats, especially in storm-damaged areas such as western Iowa, and expected mid to late summer heat during pollination that could impact grain field. Soybean futures collapsed to the level $9.64 per bushel amid pressure from favorable U.S. weather, export uncertainty to China, and record harvest forecasts in Brazil. Brazilian agencies project 25-26 season soybean output to surpass 179 million tons, well above USDA estimates. Meanwhile, tensions escalated as President Trump announced new tariffs, 40% on Brazil and 25% on India, alongside threats to penalize China further, increasing risks for U.S. soybean exports. This shift is rerouting trade toward global trade flows, potentially increasing U.S. exports to the EU, Egypt, and Turkey, while pressuring Ukraine and soybean prices. In Ukraine, production may drop by over 1 million tons due to a 24% cut in sown area and an added 10% export duty, further weakening prices in September. Moving to the shipping industry. Containerized freight index remained stable versus a week ago. Trans-Pacific spot rates declined just minimally last week by 2%. China to Europe rates remained largely unchanged. The uncertainty about trade relations between US and China still weighs on the market sentiment. Thus, general expectation is that spot rates continue declining in the course of next weeks. The Baltic Exchange Rate Index dropped by 10% due to reverse of the gains across all segments, but mostly in the Capesize, compared to a week ago. For Panamax segment, the week also concluded with continued declines. In the Atlantic, conditions remained weak, and similarly, South America remained under pressure for nearby dates, as well as Asia. In Ultra-Supramax segment, the summer holiday season arrived last week within Atlantic with a rather subdued sentiment. The US Gulf remained rather positional, while in Asia there was a slightly more positive vibe. The Handysize sector saw minimal visible activity across both basins last week. To sum up, nitrogen market has frozen in front of the Indian tender, which is expected to support price through September. However, India is the only market that supports global demand at the moment, as extremely low affordability limits purchasing activity elsewhere. As a result, ammonium sulfate and nitrates prices continued slipping last week. Ammonia price, on the contrary, has surged west of Suez in the August Tampa contract due to continuous supply limitations from the Baltics and Algeria. Finally, this ceiling seems to be found in the phosphate segment, where Indian buyers rejected any purchases higher than officially communicated threshold of $810 CFR. Still, global supply is tight without massive Chinese exports, so as soon as demand picks up in other regions, the situation might change. Natural gas price, both in Europe and the US, remained unchanged due to healthy supply and rather mild summer temperatures. Prices of all key agricultural commodities dropped more due to very healthy crop conditions across the globe that support forecasts for record yields. Container shipping activity shrank more last week, with rates decreasing across key lanes. Bulk shipping also lost momentum across all segments and both basins. So, let's see what is next around the corner, but it will be already next week. Thank you for watching. Please subscribe to the channel, put like to this video, push the bell in order not to miss any updates, and see you soon.